Okay, this is timing strategies for Friday, June 27th. Happy 4th of July to all. I'm going to make this quick because we haven't done a whole lot as far as our positions, but I want to give you a summary. We were short 80% from our kill zone at 1420 on the S&P. You can follow the patterns. We took half off, then we got short again, then we got long 30%, then we got short 25%. We were looking to potentially buy at our first level and straight long. We did. We sold it. We went short. Worked out great. We then spread long the financials in the RIDEX fund family, banking and financial funds, on the 18th. And that basically has squelched the return that we would have had we maintained a straight short position all the way down to here, where we are today. Now, as I mapped this out at the beginning of the year, we had several buy points that we were looking to get long in percentages. Basically, we're market neutral, and if the market jams back up, if we get a bear market rally, which is what we're in right now in a bear market, that spread should benefit to the upside. But what that has changed at this point for me, if we do get a move up starting next week, before we get a move down, meaning if we start to head up to this level, 1320 to 1340 on the S&P, maybe as high as 1370. At that point, what we're going to do is put on another full short position of anywhere between 50 to 100%. If that happens before we hit the B2 level that we've been watching all year at about 123, call it 123.5 to 122, right in this level right down here. We could go as deep as 122. But if we go up in the next week into the 4th of July and the end of the quarter first, we're going to take that spread off after we get about a 2.5 to 5, maybe 7% bump off these lows, and then we're going to go straight short because we are in a bear market. And what I'm seeing here, and this is my own interpretation, is the type of period or environment that we saw back in 2002. Real quick to take a look. What I mean is this type of environment that we saw back from March of 2002 until about July of 2002, where we just get 2 days up, 3 days down, 1 day up, 2 days down. The percentage moves are greater to the downside in the time and so forth. We're somewhere in either here in the time frame where we're testing either the March lows of 2002 relevant to this year of 2008, and we're somewhere either in this area right here, or we're somewhere in this area. Be that as it may, I don't know, but the patterns and the analogs and the feel, because I watched this and experienced this day by day, tick by tick, we did really good going short. The only mistakes we made were when we tried to buy instead of just holding. You never know when this type of environment is going to continue. We've got the sentiment there, the negativity, the fear. We just don't have the type of volume and price action that we need to establish this type of behavior that we see now to continue going forward. If we get the bounce next week, then we'll have it. So that's about it. I just want to give you a quick look at the GDX because we are along the GDX from yesterday at that point. Today we got some follow through. That's good. Something's a fish with the banks, as we already know, but how much worse is it going to get will be revealed after the fact. The Qs, we are short the Qs, basically the NASDAQ 100, 20% as of here, and we are also short the Russell 2000 as of here. Actually been a little higher, so we're short 40% and we're spread long 60%, but we're spread long in the gold GDX, or the precious metals for RIDEX, and the financials and the banks, and we're also long the Dow. So things are starting to change shape, and as they change and we change our positions, I'll do my best to keep you updated. This is by no means a recommendation to buy or sell or do anything. This is just a client update, and for those who may happen upon this, if they have any questions, feel free to give me a call or an email. And again, happy 4th of July. Have a great weekend.